In this video, I would like to briefly talk about a few chart analyses to help you get prepared for this week. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade forex like a professional, check out our complete forex trading course on Udemy. We've got tons and tons of great reviews. It's going to help you a lot. I have the link attached in the description below. So this video was supposed to drop yesterday, but I was so busy I couldn't drop it. That's why I'm dropping this video on Monday morning. So if you're watching this video right now, I think the market is already opened, and you could learn a thing or two from this video to help you get started with your trading week. So as usual, we're starting with the gold chart on the daily time frame. So last week we discussed a possibility of price piercing through the resistance level, aiming for clear sky. So heading towards price discovery of sorts. So like I said earlier, we had multiple price rejections from the resistance level, and we had a very good breakout, right? So a very good push to the upside from the bulls, but that movement was short-lived, which led to a bearish reversal, sending price all the way back down below this area of value, below this top resistance level. So there's a good chance we may be heading lower for gold. So we're going to go down to excuse me, we're going to go down to the lower time frame. Let's start from 2 hours time frame to see what's happening down here to spot out good trade opportunities for this week, right? So going down to the 2 hours time frame on gold, I'm going to try as much as possible to see how I can make this video fast, right? So this is our channel we had last week, and we anticipated this massive bullish move, which was met by a massive rejection by the BS to the downside. We also anticipated a bearish case scenario, which was a breakout from this price level. Now we see that's developed quite nicely. So for those who went in aggressively over here, if you had the opportunity to enter, because I think this spike happened immediately the market opened. So now we had a bearish movement to the downside. Currently price is sitting at a significant area of value. So I'm going to get rid of this because this is no longer valid. So right now I'll be watching out for a consolidation around these price levels, followed by a bearish breakout to go short. This would be my scenario to go short. Mind you, by the time you're watching this video, maybe price might have evolved further. We might have seen price going downwards, but for now, this is what I'll be watching out for to go short. Stop loss is going to be above this consolidation. And my take profit target, I'm going to aim for these lows. So this is what I'll be watching out for to go short on gold right now. So for a bullish case scenario, right, I'm going to get rid of this. So a bullish case scenario, I'm going to wait to see what happens over here. Probably we get a bounce, a consolidation, maybe followed by a bullish engulfing candle. See how the trade evolves, then get a bullish breakout to the upside. So this would be my confirmation to go long. Stop loss is going to be below the consolidation, that is to the breakout. I'm going to first of all aim for this resistance level first, then hold some positions to see if we head higher. So this is still clearly in a bullish trend. We're not going to deny that fact or dispute that fact. So we have a swing low, higher low, potentially another higher low over here, right? So if this develops into a reversal, then this trend would still be intact, right? At least not until we take out this low over here. This trend is still intact, bullish trend is still intact, and this could mean a breather for the bulls before we head higher. So this is going to be my bullish case scenario. And alternatively, for a bearish case scenario, one last point of view, we are likely going to see a push to the downside, immediate push. In this case, I'm going to wait for a retest, right, before I go short. So this is another case scenario that could play out on gold if you are watching gold to take advantage of this price action. So if this retest happen, my entry is going to be at a bearish reversal. Stop loss is going to be above the retest, and take profits as usual is going to be around this lows. So this is how I'm going to trade gold, guys. Meanwhile, there's a good chance we miss this trade opportunity because gold could simply just keep tanking. So we may just keep going down without even giving us an opportunity to enter. So if you're an aggressive trader, when we get a breakout like this, bam, you could jump in if you are an aggressive trader with good risk management. But this is unadvisable, right? I don't advise you do this, but if you're an aggressive trader, you could do this. Stop loss is probably going to be all the way up here, which is a very big risk in my opinion. So if you're going aggressive, going with very small risk, If we get a retest and confirmation of a downward movement, you can go in with the rest of your positions. So I'm going to explain once more. So let's say, for example, you're going to get into this trade with one lot and you want to go aggressive. So by the time we get a breakout, you could test the waters with 0.1 lot, right? So getting into the trade with 0.1 lot, since your entire position is supposed to be one lot, would give you an exposure just in case we keep dumping, so you don't lose out on the entire movement, right? So if you enter with 0.1 lot, then we get a retest confirming the breakout, followed by a follow through to the downside. Then you can scale into the position with the rest of your position size as we go lower, because you've already had a confirmation that we're going lower. So this is how I'm going to trade gold if I was to go aggressively, right? So that's it briefly for gold. Moving on, talking about crude oil. So crude oil, real quick, I'm going to quickly go down to the 4 hours time frame. Yeah, so we came so close to this support level. So we have a significant support level over here where we had multiple price rejections, but we haven't tapped into that price level yet. Okay, so going back to the 2 hours time frame, this is what I'll be watching out for to go either long or short. So to go long, right, so the first case scenario to go long would be waiting for price to come into this area of value, right, giving us a good sense of a reversal, possibly a bullish engulfing candle or a chain of market structure to the upside, where price makes higher highs and higher lows. Then I look for a breakout. So when we get that bullish breakout, it's going to give me an entry. Stop loss is going to be below the consolidation list of the breakouts. Target is going to be all the way at the resistance level, right? So this is how I'm going to go bullish on crude oil if this scenario plays out. So it's all about anticipation and waiting for your strategy to play out. So what I just explained is my strategy to go long. So there's no guarantee that price evolves and gives us this pattern exactly as I anticipate. But if we do get a tapping into the support level, we get a good bounce followed by a reversal candlestick pattern like a bullish engulfing candle, then I'm going to look for opportunities to go long, aiming for the resistance level. Stop loss is likely going to be around this price level, below the consolidation list to the breakout, or underneath the entire rejection from the support level. So this is how I'm going to go long on crude oil. So another scenario that could possibly play out is, we may just see price slowly grind to the upside, coming to this resistance level. Then I'm going to wait for a consolidation over here, followed by a bullish breakout. So this is another scenario to go long. So entry at the breakout, stop loss below the consolidation list of the breakout. Then I trail my position as we go higher. So obviously first target is going to be around here, second target is going to be around here. So this is how I'm going to go long on crude oil if this plays out. So I've just shown you 2 possible scenarios to go long on crude oil. So for a short position, what would I do? So I'm going to wait for something like this. A good consolidation to the upside, then a breakout. So this is going to be like a bearish continuation pattern. So if this happens, then I'm going to go short, right, in continuation of this bearish move to the downside. You can see lower highs, lower lows, obviously a downtrend. You can see what we have over here. We had a massive consolidation, which looks like a bearish continuation pattern or a bearish flag. So I'm going to wait for something similar to happen here, but in a small scale, for me to go short, right? So my first target is going to be over here. Then if we break through, I'm going to trade the rest of my positions to go lower. Stop loss is going to be above these highs. So this is how I'm going to go short on crude oil. Alternatively, if this doesn't happen as I expect, I would simply wait for something like this. So give me a minute. So if this doesn't happen like that, this could happen. So we may come down here, right, then consolidate at these price levels, then get a bearish breakout. So if we get a bearish breakout from this support level, then that will give us a solid trade opportunity to go lower, like I said, on the 4 hours time frame. So this will just be a classic breakout from a solid support level. So you can see what we have over here. So if we come into this area of value, consolidate a bit at the support level, then a bearish breakout will be a good trade opportunity to go short. Entry is going to be around this price level. Stop loss is going to be above the consolidation list of the breakout, while your take profit could go as low as 1,000 pips, right? So that's it briefly for crude oil. Moving on, we're going to talk about Nasdaq, so which is the US 100. We're going to be brief about this. So over the past few weeks, we talked about the possibility of price breaking out from this massive bullish flag, right? So we had a breakout, took out the resistance level, and now we seem to be consolidating around a newly found resistance level. So the obvious choice is going along with the trend, right, which is looking for an opportunity to go long. And to do this, I'm simply going to wait for a bit of a consolidation over here, then a bullish breakout. So the consolidation could take a day, it could take a few hours to form, but as far as we get some sort of a breather before we get a good bullish breakout, that is the only scenario where I go long. Stop loss is going to be below the consolidation, at least at the breakout, where I trail my position as we go higher, right? So trailing your position means adjusting your stop loss into the profit zone as the price goes higher. So this is briefly for Nasdaq. For a bearish case scenario, I know it's good to look at both cases. So for a bearish case scenario, all you have to do is watch out for this support level. So this where I have my eyes on. So for the bearish case scenario, you could see price reverse to the downside, consolidate a little and give us a bearish breakout to the downside. So this could be our confirmation to go short. Entry at a bearish breakout, stop loss above this place, and you could aim for this area of value as your target, right? But mind you, I'm more bullish than bearish on Nasdaq, but this is what I'm watching out for, right? So if you're interested in going short, this is what you should watch out for. If you're interested in going long, then you could watch out for this other case scenario. So up next, we're talking about US30. Excuse me. So we're talking about US30, which is actually the Dow Jones. So I'm going to remove this for a bit. We had a very good sloping trend line to the downside, massive breakouts, just similar to what we have on the Nasdaq. We had a good run to the upside. There's a good chance this rally may be coming to an end if we don't see a bullish breakout as a sign of a follow through with the bullish trend, right? So bulls are in charge right now. So since we know bulls are in charge, there's only one thing to do, and that is waiting for a bullish breakout. So this is clearly an ascending triangle. You can see price creating higher lows, clear resistance level. So it's logical to expect price movement like this, followed by a bullish breakout. Your entry is going to be at the breakout, stop loss below the consolidation, at least at the breakout, and you trail your position as you go higher. So this is a bullish case scenario for US30. I think this one is pretty obvious. But for a bearish case scenario, I'm just going to pull this back. So this gives us a solid or a more better confirmation when we go short, right? So for a bearish case scenario, you simply wait for a reversal. Price comes here, consolidates a little, and takes out this trend line, also taking out this trend line. So this will be a better confirmation to go short. So entry is going to be at the breakout, stop loss above the consolidation list of the breakout. Take profit target. First take profit target could be around this price level. Second could be here as you trail your position as price keeps dropping. So this is if we indeed get a reversal and a bearish breakout. So there's some similarities between the US30 and the US 100, so the Dow Jones and the Nasdaq. So if you're watching the US30, you see a good confirmation of a bearish breakout for price to go lower, then you shouldn't take the risk of going long on US 100, right? Because these two currency pairs may, lag a bit. So US 100 may not move at the same time that the US 30 moves, so the Dow Jones moves. So just watch out to see which gives a cleaner breakout for more price confirmation before you go long or short, right? Because each of these, so one of these may be giving you the risk signal as to where price is headed, either to the upside or to the downside. So just be careful if you are trading US 100 or trading US 30. Moving on, we'll be talking about GBP-USD. So GBP-USD, this chart isn't as clean as I wanted to be. I didn't want to talk about this, but I just figured you guys have been screaming at me to make some, currency pair analysis. So that's why I picked out GBP-USD. There's not a ton of good charts across the currency pairs right now. So GBP-USD. Clearly, if you take a look at the price movement from the lows, it still looks bullish. But if you're taking a look at the price movement from the highs, it looks bearish. Why? Because we had a high and Now we had a lower low, so this low is lower than this low, significantly lower than this low, and now we seem to have made a lower high. So our confirmation will be price making a lower low. Then that will signal a change in the short-term trend. So this is going to be our short-term trend, excuse me, yeah. So this is going to be our short-term bullish trend, while this is going to be the new either short-term or long-term bearish trend, right? So we just have to wait and see what price does. Meanwhile, for day trading, for quick trade opportunities, I'm going to go down to the 2 hours time frame. In order to go long, I'm simply going to wait for price to take out this resistance level, and that will happen if we see price going to this area of value, consolidating a little, and then giving us a bullish breakout. So the reason why I wait for consolidations before the breakout is because when it happens like that, I do not need to wait for a retest as some sort of confirmation before going long. I can simply go aggressively because we already had a consolidation, and that consolidation acts as some sort of confirmation before the breakout. So this is what I'm watching out for to go long on GBP-USD, which goes in line with the bullish trend, taking a look at the price action from below, right? While for a bearish case scenario, I'm going to get rid of this. Since we just tapped into this area of resistance, I'm going to wait for a better build up, right? I'm going to wait for a better build up, giving us a clear bearish continuation pattern like this, kind of like a bearish flag, symmetrical triangle with a bearish breakout, a rectangle, anyhow you want to call the pattern. But as far as it gives me a better confirmation of a bearish movement, then I'm going to go short. Stop loss is going to be above the consolidation, leads to the breakout. Take profit is going to be here first and all the way down here. So this is how I'm going to trade GBP-USD. So I'm not just going to jump into a trade when I see choppy movements like this, right? Because this clearly shows us that the markets or traders in the market are still indecisive. The decision has not been clearly made yet as to where we're headed. That's why we're having choppy movement. Although the bears are somewhat overpowering the bulls, so that's why you can see the movement to the downside, but it's too choppy, so I wouldn't be using this as a basis to go short. So that's why I'm going to be waiting for a more pronounced chart pattern or more pronounced price action indicating or signaling the direction of the market before I go long, go short. So that's briefly for GBP-USD. Lastly, we'll be talking about the NZD-USD. So this NZD-USD chart on the 6 hours time frame. You can see we have a clearly defined trend or trend line with 1, 2, 3, and 4. So we have 4 multiple bearish reversals. Each time we tap into this trend line, we see price falling to the downside. So right now, the 4th time we just had this reversal, so I think there's a good chance we head lower. So I'm going to go down to the 2 hours time frame to see what's happening down there to get a good trade opportunity for this week. So for me as an aggressive trader, I would go short right now. Okay, so don't bite my head off on this. I'll go short on this because we had a good rejection from the trend line. Picking this trend line, we had a good breakout, not having significant fully formed candles like those heavy red candles like what we have over here, or this green candle that we have over here. But we clearly have price trading below this trend line, and now price is trading below a good area of value. So over here we have a good base, which is support level, and we're clearly trading below. So I'm simply going to go short right now, right? But I won't be trading these though. I'm just telling you what I would do if I were to if I was to trade NZD-USD, but I wouldn't be trading this, focusing more on Bitcoin and gold right now than crude oil. For those who are interested in trading NZD-USD, I would go short right now with my stop loss all the way at these highs. So if we use the price to, this would be approximately 120 pips. Yeah, then my take profit is going to be around 300 pips. Yeah, which is all the way at this low. So that's a good risk to reward ratio of 1 to 3, I think. So this is how I'm going to trade NZD-USD. So this consolidation and chopping movement over here already acts as a confirmation to me. So even if we go above this trend line, taking out the stop loss, it means price is likely to head higher or could probably fake out. But right now, following the price action of what has happened over the last few months on Nasdaq, I think it's safe to go short. So this is briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you're interested in learning to trade forex like a professional, please, I advise you take advantage of this opportunity. Learn to trade. I teach you from scratch with series of videos, over 200 videos. You can check the reviews. It speaks for itself. So that's it from me, guys. See you next week.